Hello, everyone, and thank you for taking the time to review the Morgan Hill, California, September 2009 real estate market analysis. My name is Robert Whitelawn. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. I'm also the president and CEO of Whitelaw & Sons Real Estate Services, sponsoring this presentation. Now, let's go ahead first and jump into the ways you can get in contact with me. The first and best way to get all the information that you need is at www.soldbyrobert.com. In addition to getting all of my contact information there and looking at articles I've written on real estate, you'll also be able to listen to my weekly podcasts, which are also presented via iTunes. The name of the show is Real Estate Realities with the Rebel Broker, so you can find them by doing a search on that as well. On my site, you'll also find video market reports. Every month I do a market analysis of various areas that I serve here in Silicon Valley. You'll find those at the bottom of the front page. And of course, you can always search the multiple listing service on my site. It's a map-based search, so it makes it really easy to find what you're looking for. Now, if you'd like to contact me via email, just send those to robert@soldbyrobert.com. If you prefer to call me directly, you can dial 408-852-0525. You can also get me on AOL Instant Messenger, Google Talk, and Yahoo IM with the screen name The Rebel Broker. And on Skype, simply Rebel Broker for the screen name. Referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate, please feel free to get in touch. I'm happy to help in any way I can. And even if you're not interested in real estate in the areas that I serve, I can help you find the right agent for you. So just give me a call, let me know what you're looking for, and I'll find the perfect agent in your area. Now let's go ahead and jump in and take a look at the supply and demand numbers for Morgan Hill for September of 2009. We'll go ahead and take a look at these inventory numbers. We can see things have actually gotten quite a bit better. Inventory numbers are down 42.59% from September of last year. Now, what you're looking at here is just the month of September going all the way back to 1999. So it's a very apples-to-apples comparison as far as time of year is concerned. Now, as I said, inventory is down just a little over 42%. That's 135 fewer homes listed in Morgan Hill in 2009 than the same time in 2008. Now, that's a pretty big deal considering the size of the market here in Morgan Hill. The total homes on the market is only 182 right now. So you can see and obviously the percentage drop indicates that, but that's a huge, huge weight lifted off of the local market here and has gotten our competition situation a little bit more balanced. Instead of having dozens of homes for everyone that sells, those numbers are getting far more reasonable. Now let's go ahead and take a look at the number of homes that are getting listed. We can see that's also down, and that's helping to bring down the inventory numbers. New listings are down 47.44%. That's 37 fewer homes listed in the month of September of 2009 and the month of September of 2008. Again, that's also good news. And not just because it helps keep down the inventory, but it also tends to indicate that perhaps we're seeing fewer short sales and foreclosures. The way the market's working right now, it's hard to know what is left in the foreclosure market. I think that as far as if you'd like to get a little bit more insight into what I think is going on with foreclosures, you might want to listen to one of my podcasts. I actually do several shows dedicated to that topic, and I think we're actually in for some tougher times on foreclosures. Sales are up 30%. That is a pretty good number. In fact, look at that. We've been steadily going up since 2007. That is 9 more homes sold in September of 2009 than the same time in 2008, for a grand total of 39 homes sold in Morgan Hill. Now, that gave us a total months of inventory available of 4.66, and what that basically means is that if the inventory numbers froze where they are now and the sales numbers stayed at the same level they are now, it would take us a little over 4.5 months to sell off all of the inventory. To compare that to the county in general, we are underperforming the county. The county's down closer to 3 months of stock on hand. That's 3.06 for the county for the same time period. So as usual, Morgan Hill is sort of having a more difficult time of it than the county at large. We're underperforming, as I said, for the average part of the county. But at least things have gotten a lot better, and these numbers tend to bear that out. All right, now let's go ahead and take a look at supply and demand, but this time we're going to look just straight back without skipping months. We're going to go straight back to April of 2008. Again, we'll start with the inventory numbers, and we can see that's a pretty steady trend down, which is good news. Lower inventory is good. That we'll see what the breakup is between short sales and foreclosures and conventional sales, just to see how healthy this really is. But it's an indicator that at least that we're not seeing a big surge in short sales and foreclosure properties. Let's see, what was the actual drop? Inventory was down 3.7%. That was 7 fewer homes in the inventory in September than in August. Now let's go ahead and take a look at the homes that were listed. Again, this has been steadily declining. It actually it really jumped in January. You can look back. Normally, you tend to see a drop in November, December, and January. You usually don't start to see that number really go up again until February, till we head a little bit more out of wintertime. But I think a lot of that had to do with folks who had to sell versus folks who wanted to sell. So we saw a uncharacteristic jump in the number of listings in January. Now, between August and September of last year, we saw a bit of an increase in homes that were listed. That was a little bit strange. We actually usually don't see things happening that way. We see folks tending to list just before we head into the summer months, and then things starting to dwindle down afterwards. So this is what we're seeing now is more in step with a typical market. So that's also kind of encouraging. And as I said, the listing numbers, I don't know if I said this or not, is down 12.77%. That's 6 fewer homes listed in the month of September than the month of August. Now, as for solds increased compared to last month by 5.41%. That was 2 more homes sold. Again, that's pretty good news, but as a general trend, what's really good to see here is that that's trending upward. We had a much better summer season this year than we did last year. You can look at the summer season last year, June, July, and August, and September is usually when you get the last of those sales closing, because remember, you can take 30 days or more for an escrow to close, so a home that was in contract in July or August could be closing in September. And then you, of course, see the decline in October and November. But this year, we really got an actual boost in sales in June and July, and that all, I think, worked for the better of the market. Now, let's go ahead and take a look at what the breakup was of those homes that sold, because oftentimes just looking at how many homes sold doesn't tell the whole story. Now, this month, conventional homes made up 41%, so that's pretty good, but foreclosures made up an equal amount. So we saw an equal amount of conventional and foreclosure sales, and the rest of the market was made up of short sales. Now, I'd love to see that number heading more into the 50-50 side or 60-40 side in favor of conventional sales. That's what we're seeing in other communities. In some communities, we're seeing 80 and 90% or higher conventional sales. The county in general is doing better than that. So we're still seeing more than our share of short sales and foreclosures in the Morgan Hill market here in September. Now, let's compare that to last month, where you can see that we've actually declined a bit in foreclosures, which is good news. Short sales are down this month compared to last month. Foreclosures are down compared to last month. So we've really gone from about half of the business being done being conventional last month to less of it being conventional. I'd like to see that trend change, but that's where we stand for September. Now let's go ahead and take a look at what home prices are doing. Now, as you can see, Morgan Hill was really one of the first places hit by this down market fairly early in 2007, where the market really dropped. And then for the month of September, it looks like it stayed pretty steady between 2007 and 2008, but I know from firsthand experience that there was quite a bit of fluctuation in that intervening year between 2007 and 2008. But we did see another big drop on the average home price. It was down 24.82% when compared to the same time last year. That was a dollar value drop on average of $188,010. Now, the average home price for September was $569,603. And again, that's below the county average, which was over $600. Now, the median price, that was $540,000, and that was down last year by 16.2% for a dollar change of $104,400. Now, so much of this is really just an indicator of where the activity in the market is versus telling you actually what you should or shouldn't be doing with the pricing of your home. Now, as I mentioned, we saw almost a 25% drop in home values. Does that mean you need to drop the asking price of your home by 25%? Well, not necessarily. It depends on where your home is in Morgan Hill, because there are some submarkets within Morgan Hill performing very differently. But as you can see, the median and the average are fairly close to each other. And what the median tells you is where the weight of the sales are. So in other words, if there were 100 sales, half of them were above the median and half of them were below the median. And since we're seeing that bar just a little bit below the average, that tells us that there were more homes sold below the average price than above the average price, which tends to tell us that at least we're seeing a little bit more activity at the higher end on some of these properties. Now, for Morgan Hill, let's go ahead and talk about what the highest priced single-family residential home was. That was at 1090 West Edmondson Avenue. That sold for $995,000, according to the multiple listing service that originally listed for $1,099,000, and that it was on the market for only 13 days. And the reality, though, is that they were trying to get that home sold earlier than that, and it was originally listed for 1.45 million. So they took a much bigger discount than the official numbers are going to indicate off of that price. And that's one thing I have a problem with the multiple listing service data. This is true of all the multiple listing services. There are little tricks that can be done to disconnect a home's listing information from previous listing information, so that if an agent doesn't want someone to know they've dropped the price as much as they have, they can relist the property if they wait an appropriate amount of time or a decent amount of time, and then relist it and lose that connection. That's obviously what's happened here. The property was probably taken off of the market for a month or more, and then put back on the market. But originally, these folks wanted to get $1.4 million for it, and they ended up getting about $500,000 below asking price. Now, the lowest price single-family residential home was at 16810 Saddlehorn Way. That sold for $453,500. That was a short sale property. It was originally listed for $595,000, and it was on the market for 149 days. Let's see. What else have we got? The average square foot. The average price per square foot was $269.35. That was down from last month's $272.97. Now let's go ahead and take a look at that same data, but now we're looking straight back. We're not skipping, just looking at the month of September going back. We're looking all the way back to April of 2008. Pretty hard to deny the trend here in the average price, even in the 12-month or plus period that we're looking at here on this chart. And as far as the median is concerned, look at that. You can see some months where the median's higher, which tells us that more homes were selling above the average price. And because of the number of homes that sell in Morgan Hill, those numbers, one really high-end home can really kind of skew these average home prices. You can see back in January of 2009, for instance, I believe that happened. We had a very expensive home sell at that point, and it really skewed the average price. So it's always good to see the median to get an idea of where they were clustered. And again, we saw them this month clustered a little below, last month clustered a little bit above. Now, the price change from August to September, it was an increase of 8.7%. That's a $45,612 change. Median price was up 0.56%. That's a $3,000 change. We had a total of 39 homes that sold in Morgan Hill in September of 2009. Now let's go ahead and take a look at days to sell. Now, an interesting thing that happens with days to sell, and something you should keep in mind, is whenever we see increases in the total number of homes sold, particularly if it's a large increase, and particularly if the inventory is particularly high, you'll see this number jump. The reason for that is because when you start to sell more homes in a market where you have a higher inventory level, you tend to sell off, particularly when you're seeing a peak in those sales. You're starting to sell off properties that have been on the market for a very long time. So that'll be reflected in the days on market, since this only is really reporting properties that have sold, not just the properties that are active, but just the properties that are sold. Now, the days to sell is down 20.61% when compared to the same time last year. That's 27 fewer days to get a property sold. The lowest, let's see here, the highest days on market. This is one reason why I like to bring this up. The longest days on market was 929 days. We had a property sell that took 929 days to sell. The next highest was 457. So you can see that we had an awful lot of homes that were selling at a lower number of days, but a couple that just were crazy high numbers. Now, we didn't have any homes sell before they went into the MLS, which happens fairly rarely. We had 3 homes sell in the first week in 1 to 7 days. We had 13 homes sell in 8 to 30 days, 4 homes sold in 31 to 60 days, 7 homes sold in 61 to 90 days, 7 homes sold in 91 to 180 days, and 5 homes sold in over 180 days. Now, 41% of the homes that sold did so in under 30 days. That's actually pretty good. I think that a lot of that has to do with how your house is being marketed and the numbers that you have to back up what you're doing. And it's not just the homes that have sold. Because of the way this market works, you need to also be comparing yourself to the competition. You need to have homes out there and look at them and think, in my price range, am I offering as much or more than the other guy who's trying to sell his house? Now, competition isn't quite as tough as it was, say, just a year ago in Morgan Hill, but I think those are elements that are still very important also, and the work that your agent is doing for you is going to be very key to determining whether or not you're part of that 41% that gets it in an offer in less than 30 days, or the other 59% that end up taking longer than that. All right, now let's go ahead and take a look at the days to sell numbers just over the calendar month going back to March of '08. A lot of variation there. There's a little ebb and flow there. Those big peak days are usually associated with months where a property that's been on the market for a really long time has sold. The general trend has been downward. You can see that, and that's really what we want to look at. Some of these month-to-month fluctuations can be a little deceiving, but that average number shows it going down, so that's a good indicator. And it's also makes sense given the fact that we know that we've seen such a dramatic decrease in the inventory numbers. Now we go ahead and take a look at where these properties are located. I do this just so you can sort of get an idea of the place I'm talking about. This is basically almost all of Morgan Hill. There's quite a bit of it extends up into the mountains there to the east, and then to Lake Anderson in the west. But there's no real unusual clustering here. Some of these properties that were a little tougher to sell, I think, were probably the ones up there at the top, the northwestern end of the screen. Some of those properties are a little bit tougher to get sold. But in general, it's a nice spread. We're not seeing any hot spots or areas that are getting a lot more attention than other places. It's interesting to note, though, that the communities, you see where it says Holiday Drive, right on the Lake Anderson area there. I'm very familiar with both Holiday Lake Estates, which is right where the property number 2 sold, but there's also Jackson Oaks, which is that bundle of roads that's just west, sort of southwest of Holiday Drive and Holiday Lake Estates. Those are areas that have some beautiful homes in them. We haven't seen the volume of sales that we would like to see there. So it's the sales in those areas are down, but also you're getting some good deals there. So if you're shopping in the Morgan Hill area, those are some areas to look because we've got some great properties currently listed there. Now, I do appreciate you taking the time to listen to my reports on the markets that I serve. I'm not going to read through all these again. Just wanted to put them up here so you have access to them one more time in case you'd like to jot them down. Always happy to talk to you about real estate or anything else that might be going on with your questions regarding properties or anything like that. So feel free to get in touch, and I look forward to talking to you all next time.